I'd like to simplify reverse mortgages. There's so much misconception out there, but they're really pretty simple, the basics anyway. A reverse mortgage is like any other mortgage. There is a loan on your home, and at some point in time, it needs to be paid off. Now, the requirements are different with a reverse mortgage than traditional loans, because with a reverse mortgage, you must be at least 62 years of age and plan to live in that home for the rest of your life. With a traditional mortgage, you normally are going to be making monthly mortgage payments. Eventually, 30 years down the road, you pay that off. With a reverse mortgage, there are no monthly principal and interest payments to make. So that's probably why we get the term reverse mortgage, because rather than making payments, the reverse is true. There are no monthly principal and interest payments to make. But let's be clear, you do need to pay your taxes and insurance, any HOA or property charges, and keep the property in decent shape. And that's the same thing you do with any mortgage, right? So that's how a reverse mortgage versus a traditional mortgage works. But there are so many other very cool things with reverse mortgages, like you have a line of credit often with a reverse mortgage. And with that line of credit, it gives you access to more and more equity in the future. In fact, with a line of credit with a reverse mortgage, you may be getting a large chunk of money available down the line, and even if there's no equity left in your home, that line of credit is still available to you. You see, there's what they call a growth rate attached to a line of credit. Now, it's not interest, but what it does is it takes into consideration that values of property are increasing and you're getting older, and so it allows you access to more money in the future. Now, with a traditional line of credit or equity line, you've got to make payments on it. And there's what they call a draw period, which is a specific period of time. You may only have to pay interest during that period, but eventually you're going to have to pay both principal and interest and not have access to any more funds. Different from a reverse mortgage line of credit. As long as there's money available, you can have that money to you at any time that you want. And it's especially helpful for younger folks, say baby boomers in their early 60s, and maybe they've already paid off their mortgage on their home. You want to stay in that home, and you figure down the line, I'm going to want access to more cash. I don't really need it right now, but I do in the future, or pretty well figure that I'm going to. Because in this day and age, the assets that we think we're going to have, those investments in stocks, bonds, 401ks, etc., may or may not be there for you, and it may not be enough. Whereas if you've got a line of credit that happens to be growing in a home that you're living in for the rest of your life, and you've started accumulating that growth rate in your early 60s, by the time you're 75, 80, 100, that chunk of money is going to be growing to a significant level. I can give you specifics on that. Just give me a call. But that's an important asset for you in the future. So keep that in mind when you're looking at your overall financial plan. You're talking to your financial planner about how am I going to have enough money down the line so that when I need some extra cash, that it's there for me. Now let's talk about who it is that should care about reverse mortgages. Now, first of all, somebody who's older, say significantly older, maybe even my parents' age. I've got a mom who's 92. She has a reverse mortgage. I'm not going to go into details now about that, but there's a lot of us whose parents are still living, and they're in their 80s, their 90s, and they would like to stay in their own home. And a reverse mortgage can help them do that. It may be somebody just like my mom who needs in-home care. A reverse mortgage can pay for that. You may be surprised, and I always thought that older folks just planned on living in a nursing home or moving in with their kids. That's not so. Most older people, if you really ask them, would rather stay in their own home around their own stuff and not move to a nursing home. So a reverse mortgage allows them to do that. The alternative for many of us may be that mom and dad don't have the wherewithal to be able to afford care, and their choice is going to be moving in with us, which may or may not be happy for either one of you. So this gives a person an alternative, keeps the older American happy in their own home, and relieves the pressure off their kids to be either taking them in or writing those monthly checks. I mean, how do you really, are you in a position, I'd say, to be able to write checks for your mom and dad in order for them to stay in their home or go into a nursing home? Now, many times the heirs are saying, well, you know, we want that chunk of money, that equity in the home when our parents pass, and that's our money. Well, let's get real here. Your mom and dad have worked their whole life in order to be able to have a decent living as they go on into their later years. And is that really fair that you expect that money is yours? Just a consideration there. Every family is different. A lot of times what I do is I talk to families together so that there's a good consensus all the way around that it's the right thing to do for the family, that the mom and dad is happy, the kids are happy and go, you know what, it is mom and dad's money, and we want them to be able to enjoy these years, and we're going to be okay. You know, one of the things also with a reverse mortgage, and this isn't talked a lot about, but if there's sufficient equity there in the home and the homeowner wants to help their kids or their grandkids at this point, there's nothing to say that they can't do that. You know, with a reverse mortgage, the money belongs to you, and you can do with it whatever you want. It is tax-free money. There's no income tax owed on a reverse mortgage as you take that money out. So if you want to help your grandkids or your kids in advance, transfer some of that legacy money to them at this point, hey, you can do that. That's totally possible with a reverse mortgage. Now, you know, another segment that's really interested in reverse mortgages is the boomers. Now, 10,000 people every day turn 65. These are our baby boomers. I happen to be one. And I know from my friends, a lot of them, they want to enjoy life. They want to do all the things that maybe they couldn't do when their kids were growing up. They love their grandkids, but they don't really want to live with their kids or their grandkids. So they want a lifestyle, that 62 plus lifestyle. And that's what we do, is help fund that 62 plus lifestyle. It's a lifestyle that you want to enjoy. So with a reverse mortgage, that's entirely possible. Maybe you're tired of the home that you've been living in and you don't want to keep this home. You'd like to buy another one. Now, not every person wants to downsize. Talking to my friends, many would like to get the home of their dreams. They've lived in this house they're in right now all these years, raised their kids, and it's no longer suits their needs. They really want the cool house that they've always wanted, and they can sell the house they've got, take those loan proceeds or proceeds from the sale of their home, and buy the house they really want with a reverse mortgage. In the lingo of reverse mortgages, they call it the HECM for purchase, or H4P. Now, a lot of realtors aren't real familiar with it, but you got to get familiar with it, because it's that sleeping giant out there, the reverse mortgage for purchase. And as the baby boomers all of a sudden realize, hey, we want to do something. We want to do something with the home we've got. We want something else. We want to fund the lifestyle of the future. Now, many times a person says, okay, well, I could just get a loan. I've got this cash coming out, and I could just get a loan for the house that I want. But did you know that once you're retired, that you may not be getting a loan? Whether you have fantastic credit or not, you don't qualify. You don't have the income. You don't have the debt ratio. There's a lot of things involved that can keep you from getting a loan, traditional loan. But that doesn't mean you can't get a reverse mortgage. A reverse mortgage for purchase is significantly different. Either the all-cash purchase or the reverse mortgage for purchase, there's no monthly principal and interest payments. You pay your taxes and insurance either way you go, but no monthly principal and interest payment with a reverse mortgage. And the cool thing is an all-cash purchase, a $500,000 house, all cash is $500,000. However, with a reverse mortgage, a $500,000 house will cost you about $250,000 cash, and that will include the loan costs that are involved in the purchase. So for about half the cash, you can get twice the house. That's just a good way to remember. Reverse mortgage, half the cash, twice the house, as with an all-cash purchase. And let's face it, in Southern California, you can't buy much for $300,000 on a regular loan basis. But with a reverse mortgage, you could even buy a $600,000 house. Or there's nothing to say, if the house is much more expensive, you can still get a reverse mortgage and pay the cash difference. In a lot of cases, what happens is you can buy the house you really want and plus keep some cash in your pocket, which is even better. So you get the home of your dreams, you get cash in your pocket, you have no monthly principal and interest payments, and voila, you've just funded your 62 plus lifestyle. So all good. Now let's talk a little bit about millennials. You know, I am out there in networking groups and talking to millennials. And what I say to a millennial is that a reverse mortgage makes sure that your mom and dad or your grandparents aren't moving in with you. So think about that. You're married, you're young, you're raising your family, and all of a sudden, what about mom and dad? And so many of my young friends are facing that right now. Their mom and dad may be in a situation that they're not sure what their future is going to look like. But they have a house, they have their own home. And a lot of them would like to know, how can they stay there? Well, as their sons or daughters or grandkids, you can say, hey, have you thought about a reverse mortgage? And I know somebody that can probably answer your questions. So call me. That's what I do, is I talk to families and millennials. Hey, you either are going to be taking care of mom and dad or your grandparents, or helping them find a better solution. And hey, isn't that what it's all about? Families working together. And you've got your whole life to be able to put enough money into your own future that you may not need that inheritance. And let's face it, the way things are going, there may not be a chunk of money available for you because your parents or grandparents may live a long time. And hey, you want them around anyway. So let's find a way to help mom and dad stay in the home they love and keep the family happy all the way around. So what else does a reverse mortgage do? One of the big things that for people, particularly about my age, I hate to keep saying my age, but hey, these are things that I face too, that Social Security, it's like, when do I take it? If you're 62, you could start taking Social Security. But did you know that by waiting a bit longer, you can collect a lot more? Well, what if you've just hit 62 and you go, hey, I don't have that much money coming in. And it would certainly be nice if I had that Social Security, even if it's not that much, that it's going to be in a few more years. Well, what I did for one of my clients, she happened to be a hairstylist, and she was not retired but wanted to kind of cut back, and so she and I talked how to do that. She didn't want to take Social Security until she was about 70, and the reverse mortgage was going to give her enough each month so that she wouldn't have to take Social Security yet. Also, she'd be able to cut back a little bit on her hours. She was getting, like a lot of people that have to stay on their feet all the time. She was getting tired and wanted to cut back. So her reverse mortgage gave her the ability to do that. Also had another friend, and this client owned a beautiful condo downtown, and it was actually her financial planner that called me and said she needs to talk to you because she's going to be running out of money, and she owns her own home. It's free and clear, and what can you do? Can you help her? So we talked. She was a delightful lady. I just love her. She was a retired professor, and we were able to get a reverse mortgage for her, paid off a lot of debt that she had acquired because she had some things that she was trying to do, and spent a lot of cash that maybe she shouldn't, but she did, and the reverse mortgage took care of that. It's giving her a wonderful line of credit, so she's going to be able to finish up her projects and have plenty of reserve available for her. Gave her tremendous peace of mind. Then there's the person that is wanting to buy a home, and they were just selling theirs. They wanted to travel, just kind of what I was talking about, wanted to quit work, and the only way they were going to be able to do that is if they sold the house, took that money, bought something else, had cash in the bank, and were able to then retire and go on with life. And that's exactly what they did. I've got lots of stories to share, but each one is special. And it's special because it's you. And it's my job to help you get the right reverse mortgage that funds your 62 plus lifestyle the way that you want it. You define your future and where you want to be. How much cash flow do you need to make the future what you'd like it to be? With a reverse mortgage, we look at funding a lifestyle up to the age of 62 or up to the age of 99. So when we get together, I'll show you what it takes to take that reverse mortgage and how it goes over time up to about the age of 99, and there's normally still plenty of equity left. And one of the good things with a reverse mortgage is, well, I think the best thing with a reverse mortgage is no matter what the value of your home becomes, whether the value goes up or down, The reverse mortgage is not due till the last person on title permanently moves out. So that means you can live to 110, 20, who knows how long we'll live in the future. But if you've got a reverse mortgage on there, you do not have to move out if the home value is significantly less than your loan balance. And even better than that is that there's mortgage insurance. FHA HUD insures these loans so that in the event that as you live a long time, there's no equity left, when it comes time to sell the house, the lender is not coming after your heirs. The reverse mortgage insurance covers any difference between the loan balance and the value of the property. It's called a non-recourse loan. And non-recourse means that they can't come after you or a family member if there's a difference in what the value of the home is and the loan balance. There's so many ways to fund a 62 plus lifestyle, and I'd like to tell you all about them. So what's your personal situation? Give me a call. My number is 858-344-5998. You can also check out my website, kolereversemortgage.com. Look forward to talking with you real soon and helping you fund your 62 plus lifestyle. Thank you.